Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. The core pattern that drove this market since mid-July has been the July to November ascending triangle, currently 23,080 to 25,195. I've once again highlighted the pattern in blue on my daily chart. Whilst this looks like a good pattern, it has, for example, had the requisite number of touches on each side that is necessary. It still had some imperfections. Both the lower trend line and the flat overhead trend line had been breached, the lower trend line especially. However, the breaches were repaired and in the end it was a good pattern. It is noteworthy to mention that the overhead flat trend line is the August 2011 high, and had also been reinforced by the nearby long moving average, currently 25,670. 2 weeks ago, the market broke up through the flat overhead trend line, punching and closing over this trend line and the long moving average. Early last week, we saw the exploitation of this move higher, with prices pushing up through and closing over the May 2011 high at 27,330, the April 2011 high at 27,950, and the recent 50% Fibonacci line at 29,470. I had in recent weeks given the potential size of move higher, and last week labelled some detailed topside targets. Thus, we had a primary target in the 30,070 area and a secondary harder to reach target X in the 32,160 area. The primary target has already been achieved, but the secondary target X is still live. However, it is obviously harder to reach, and last week's rally failed to reach it, with prices dropping, well, crashing more like, crashing down with a bearish opening long black Mariposa and bearish engulfing pattern combination last Wednesday, that eventually saw prices punch down through the long moving average and the upper trend line, flat trend line, of the ascending triangle, though not really managing to close below it. Though I suppose one might look at yesterday's action in that way. Hence, because of this strong move and subsequent strong fall and subsequent decline, strong rally and subsequent decline, that's held up over the flat trend line, I'm minded to leave the secondary target at 32,160. I'm minded to leave it alone for now. One other factor to discuss. I said last week, and I quote, we had another bullish factor late 2 weeks ago. Well, that's now 3 weeks ago. It was a bullish bow tie formation of the short moving average, currently 25,075, the short medium moving average, currently 23,530, and the medium moving average, currently 22,735. They all crossed over 2 Fridays ago. Well, that's now 3 Fridays ago. Now, bow tie formations have 2 elements. The first is that the market moves in the direction of the exiting moving averages from the bow tie crossover. In this case, it was upward, and that proved to be the case. The second is that between 15 to 20 sessions after the crossover, in this case, this will be between the 25th of November and the 2nd of December, we ought to see the beginning of the next major move, and it is usually in the direction of the moving averages or upwards as well. Thus, I would ask you to look out between those dates, especially to gauge what is happening. End of quote. It'll be interesting to see just exactly what the market has in mind in between the 25th of November and the 2nd of December. LME 3-month zinc. There is still an awful lot of stuff going on here, all at the same time. Thankfully, I've retired some of the no longer valid parts. So, some while ago we had a breakdown below the March 2020 to June 2022 ascending expanding wedge pattern, currently 38.65 to way up off the top of my daily chart. This pattern is highlighted in dark blue. There are some outlandish potential targets below for such a long dated and wide pattern, so to keep an element of realism in here, I would suggest looking at just the possible primary target X for such a pattern in the 25.45 zone below. The next pattern is an even longer one, but a pattern that has been impacting the market directly over the last 4 weeks, and realistically since late September. It is the 2015 to 2020 bullish Andrews picture, highlighted in red on the daily chart. Specifically highlighted is the lower tine, currently at 28.10. This pattern has shown the bullish angle of attack here for years and was being tested on the downside for the first time over the last few weeks. The third pattern is a more recent one, and it shows a good indication of the recent bearish angle of attack since mid-August. It is a late May to mid-August bearish shift pitchfork, which is highlighted in purple. The most recent impact has been upon the middle time, currently at 30.57. So where are we now? Well, we've recently moved up over the short medium moving average, currently at 29.80, and breached the almost flatlining medium moving average, currently 31.15, but failed to close over it last week. In the process, the market made a 3-day bearish evening doji star pattern, causing the market late last week and early this week to drop down through the middle time and the short medium moving average and into the two small congestion zones between 29.58 to 29.65 and 29.16 to 29.05. This latter one, that's the 29.16 to 29.05, is where we are now. It is also not too far from the lower time of the big old 2015 to 2020 bullish Andrews pitchfork, currently at 28.10, which in turn is lodged within a congestion zone between 28.24 to 27.91, and that holds within it the June 2021 low at 28.10, the July low at 28.24.5, and a September low at 27.91. So there is bearish pressure here, strategic, from the break below the big old ascending expanding wedge pattern, and also nearer tactical pressure from the bearish shift pitchfork, which is shallower and more considered than the earlier bearish Andrews pitchfork. And what is countering that is this lower time of the big old 2015 to 2020 bullish Andrews pitchfork. Until this is broken, or the other one's broken, then an uneasy balance will prevail, or at least until something else turns up. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.